Let's talk deals now, because earlier this year, Goldman Sachs appointed new co-heads to lead the bank's M&A unit. Stephan Feldgoise, who has been with the bank since the late 90s, sat down with Bloomberg senior deals reporter Ed Hammond to discuss what the activity he's seeing as a very unusual year wraps up. Take a listen.
2020 was certainly what I'll call a barbell year. The first third of the year was quite active up until the pandemic. In the pandemic, we certainly hit what I'll call an air pocket. But as you say, coming out of the pandemic, it's been an extraordinary level of M&A at the highest levels we have seen. Now, some of that was pent-up demand, but as you look at the fundamental drivers of M&A, so equity markets at significant levels, debt markets, and the banks being very willing to lend, those fundamental drivers remain in place. So as you look towards 2021, you feel that the support or the fundamental drivers of M&A remain very strong.
And David Solomon this morning gave an interview saying he was concerned about the euphoria in the market, I think specifically referring to the IPO market. Are you similarly anxious about just the level of activity we're seeing in the M&A market at the moment?
So I certainly wouldn't characterize the M&A markets as euphoric. I think what I'd say is that the fundamental drivers, in addition to what we talked about before about companies thinking differently or more broadly about risk and where M&A should happen, are really the fundamental drivers. I won't comment on the IPO markets, but again, when you look at the fundamental drivers of M&A, CEO confidence, equity markets, debt markets, risk in a different light, in a different lens, all of those remain, I'd say, as fundamental drivers that continue to drive the M&A market.
And in terms of fundamental drivers on the side of the seller, obviously a lot of companies have seen their own valuations crushed and maybe recover less than some of the potential acquirers out there. What does that mean in terms of just the dynamics of some of these conversations? Are we going to see more unsolicited activity, more pure hostile activity, or indeed more activity driven by the sort of activist investor campaigns that we got so used to in the years maybe 15 to 18?
So I think a couple of things I would say. You certainly see more stock deals. So a seller who may not feel that their valuation has achieved what they would like would be willing to take equity in a transaction and participate in the synergies and the upside. You also see significant activity from activists. During the pandemic, activists backed off to a degree as it wasn't as active a period. But certainly now and going forward, activists will continue to push, and we see them being very active in many, many different markets.
In terms of the advisory part of deals, which obviously is where you spent most of your career, talk to me about how that's changed during the pandemic, from the pure physical changes of not actually being in the room with a lot of the people making the decisions to actually the way that the deals are being played out and perhaps around the timeline of getting done.
So the timeline hasn't really been extended in M&A. I think what we found during the pandemic is that we were impressed by the amount of transactions, the number of transactions that were actually able to be done all or nearly virtually all from a virtual perspective. Zoom and other methods of interaction were very effective. And of course, M&A is about relationships, but we found that was able to be carried on during the pandemic through virtual interactions. And so you certainly saw a lot of activity that carried forward regardless of the pandemic.
Do you think it will ever return to the sort of pre-pandemic world of bankers being on airplanes all the time, flying to and from clients?
I think it'll be somewhere in between. Client meetings, seeing clients, seeing people will still be a very important part of M&A. That being said, certain things like data rooms, which were electronic, certain things like management presentations can be done very effectively over virtual networks, but still there will certainly be a return of getting on an airplane and going to see people and people getting together.